Hello there, this is Ben Yost with the Direct Lending Team, and I'm here to tell you the truth about how 2-1 buy downs work. That's right, the truth about how they work. Let me preface this with you know your budget better than anybody. So, what you need is someone who will actually show you the options. In my experience, 75% of the people I come across who have talked to other lenders, the other lenders don't show them anything. They just say you qualify for 500 grand, go get a home. And then afterwards, they're wondering what they did or didn't do. And a lot of times they didn't get the right loan and they made some really big mistakes. Knowledge will give you power, and that's how you really save money. So, this is about there's no wrong or right way to do this. It's just you need to know how they really work. So what a 2-1 buy down is you start at the the normal rate. It goes down, it goes down, it goes up. So you would start at like 4 3/4. Well, hell, let me just show you this. Okay, I built this for you. So what happens is like today you could be at 6 3/4 with no points. And that's another thing I need to tell you about. What points are is that's what you pay to buy the rate down and or to get a 2-1, or we even have a 3-2-1. And what you want to be, you got to remember points are either paid by you or the seller. And so somebody's going to pay for this. It's just not free. And that's the other mistake everybody makes is they think 2-1 buy downs are free. They're not. Okay, someone's going to pay for it, and there's a give and take to who does it. Now, a 2-1 buy down is going to cost about 2.25%. So whatever the sales price is, take 2.25% of that, and you're going to be really close to what they are, even though technically you go off the loan amount, but you kind of get the idea. It's better to be a little bit higher than lower. And so 2.25% of a $500,000 loan like we're using here is about $11,000. Okay, 11,250. So it's going to cost someone $11,250 to do this buy down. So if you have an extra $11,250 laying around, you can do it. But that's not what they're talking about on all their radio, TV, advertisements, internet. You're getting killed with it. What they're talking about is the seller is going to pay the points for you so you can do the 2-1 buy down. So let's go over how that looks. So what that really means is now what I tell everybody is if you really want to know how it works, put your feet in the shoes of a seller. So if you were selling your home, what would you do? Would you just be saying, "Oh, okay, 11,250 here. Who can I give it to? This is going to be great. God, I love these people. They're the best people ever. They remind me a little bit of me." They're probably not doing that. You probably wouldn't either. You probably going 11,250, $250 is a lot of money. And so I don't really want to give that away. So this is how it's being sold on their side. Basically, what they're being told is, okay, your house has been on the market for about a month. You haven't had that many showings. So there's either two things that are wrong with the home. Okay, there's only two reasons a home doesn't sell. One, it's priced too high. Two, there's something wrong with it. Mr. Seller, when you listed this home with me, was there anything wrong with it? No, then it's priced too high. So then what they do is they do a little bit of smoke and magic and mirrors and all that kind of good stuff, rabbit out of the hat. And what they say is, you know what? We could drop it 20 grand, okay, and now we're going to be at like 480. Or what we could do is keep it at 500 or maybe drop it down to 490, okay? And then we'll pay 11,250 in points so that the buyer gets a better payment. So it is true you'll have a better payment, but understand they're not going from 500 to 480. They're going from 500 and staying there, or maybe down a little bit. The bottom line is you're not getting the home for as low as you really could. Now, because everything's about the payment usually, that's really good for you because you will get a lower payment. But understand when you go to sell or refi, again, everybody's saying the rates are going to go down next year. I happen to believe that too, to back basically into the five. So you probably refi. But when that happens, you're going to have $10,000 less equity than you could have had you not let them pay the points. So again, that's what I mean by it's not a free lunch. You are paying a little bit more for the house, because those points are in there because very few sellers are going, hey, I like you. Okay, so I hope that makes sense. So in a nutshell, if you do a 2-1 buy down, your first year would be like a 4 3/4, second year 5 3/4, third year would be 6 3/4. What does that matter? I mean, at the end of the day, you're never going to write a check for an interest rate. You're always going to make it for a payment. So always think in terms of payments. So a total payment on this PITIMI, I'm only using 5% down in this because that's most of the people I work with. Most people I work with don't have 20 or 30 or 40% down like you see in the commercials. Okay, so basically your payment would be like $3,077.61 for your first year. They did go to 33 cents, and these are all estimates. Okay, these are all estimates. And so if you really want to get what your situation would be in the rates, you need to call me. It goes off the FICO, it goes off everything else. So basically, this is just to give you an idea what a 2-1 buy down is about. So you'd be at 3,077.61 at 4.75. You'd be at 3371.76 the second year, and you'd be at 3680 the third year, or you'd end up where you'd be with a payment today with no points. Okay. So here's the thing that they don't tell you about that. So that's kind of nice. You would be here the first year. You're saving about $600. You save about $300 the second year, and you save, then you go to 3680. What they don't tell you is that you also have another option. You can use that 11,250 and just buy the rate down and fix it in. Okay, and everybody who I talk to, I'd say probably 85 to 90% of the people I deal with, that's what works better in their budget. Why not just have a fixed rate that's lower than than the 3680, than the 6 3/4? Why not just have a fixed rate as opposed to you get a little bit better then? And this is what I mean. For about the same $11,250, you could pretty much fix it in right around this payment, 3371.76. Okay, so it doesn't go up, it go down. You don't get to save $3,600 the first year, $300 a month. Okay, however, you don't for your third through 20 your last 27 years, you don't have to pay $300 more. So yeah, your first year, yeah, you could get a little bit lower on the payment, but for 27 years after that, when you get into the third year, you don't have to pay $300 more if the rates don't go down and you don't refi. And so most people just go ahead and fix it in right around in here, because why wouldn't you, to be honest with you? Now, again, if your situation's different and you're going to move in the first couple of years or something, I'd take the 2-1 buy down or 3-2-1 buy down all day long. Okay, so now this is a 2-1 buy down, costs about $11,250. A 3-2-1 buy down would cost about $15,000, $16,000. So you get the idea. Okay, so that's how that works. Now, here's one thing they'll tell you too, is that, if you do refi next year, then they take the remaining money and they give that back to you for the refi. They do, but they generally do it in the term of principal reduction, which means all they do, again, they'll make it sound like they're going to give it to you, and you can use that as points to buy down the rate even further. Okay, so let's jump ahead 6 months. Let's say rates go down to 5.5. All of a sudden, 5.5 from let's say it makes sense. Well, see, what didn't make sense if you just did the one-time buy down. But let's say you're at 6 3/4, going down to 5.5. If you save $200-300, that's probably worth it for you. Okay, the average refi a person saves is about $143, and so a month, and so it'd probably be worth it for you to refi. Okay, so you go into refi, you're down to 5.5. Again, these are all just examples. These are estimates. Okay, if you're not going to trip over my fleet of Ferraris, when you walk out the door, I don't have a crystal ball. The gurus are saying the rates should get down in about the 5.5s. Historically, we don't go into the 3s. That's what lockdowns do, alien invasions, really bad stuff. That's the only reason we ever went into the 3s in my lifetime. Generally, the rates are somewhere between 4.5 and 6. That's generally where they stay if you were to average it out over the last 20, 30 years. Okay, so basically, so what happens, again, let's go back. I digress. Let's go back. So what happens when you go to refi is, let's say you have 6 months, and I'm being generous here, okay? So you've used 6 months of that buy down. So let's just say you have 10,000. You have $10,000 that will go, that we can now, what you were told could go towards helping you with the refi. Really, what happens is 9 out of 10 times, because the servicers will tell you what's doing. And I'd say 99 out of 100 times, and I don't even know. I'm just saying maybe it happened once somewhere. But what they do is they do what they call a principal reduction. So you don't get to use it as points. You just get to lower your loan amount by that amount. So let's say you're at, again, round numbers, you're at 500. You bought in at 500. You now could go to 490 and refi off of 490, which isn't bad. You got your 10,000 back, everything's working that way. But your payment's only going to change about $8. Okay. So if you refied in the first year and you didn't get the second or the third year, buy down, so to speak, at the end, your payment's going to be a little bit higher than if you just took the one time, 330, 71, 76. Okay. I hope that makes sense. So in other words, if you took just this, you'd come out a bit ahead, because then it comes down and then they refi, because you would never have gotten the benefit of this or this if you refied in your first year. Okay. So again, no wrong or right answers. You know your budget better than I do. But if this was your scenario and someone's laying it out for you, the answer would be obvious to you, because you know how you run your books, so to speak, in your family. Okay, so I hope that explains a 2-1 buy down. I know they're it's a little wordsy and all that kind of good stuff. And being live, it's a little bit, you're kind of on the spot. So I'm not as smooth as I usually am. But listen, I do have personalized home buyer seminars. In other words, what I do with everyone is I'll jump you online and we'll go through everything, whether it's Zoom or whether you want to come down to my office. I'm just standing here off I-25 and I'm off of Parker and 225. And so you can just come down to my office, or nowadays we just do a lot of Zoom calls. I'll do the same thing as I'm kind of doing here. I'll walk you through all your numbers. If your down payment assistance, is that for you or not for you? Conventional FHA. If you're going FHA, you want to know why. If you're going conventional, you want to know why. Okay. Again, you want to know how down payment assistance works if you're a first-time buyer, and sometimes second-time buyer. Jumbo, you're going to want to know all your, how that all works. So basically, bottom line is one of the things I do for you is after we know what you're pre-approved for and the programs you're pre-approved for, I'll sit down with you. We'll go over that in person, so to speak, or on a Zoom call, so that you actually really know what you're doing when you go out there and look for a home. If you have any other questions, please give me a call. My phone number is right down here. Love to hear from you. And other than that, you have a great day.